Welcome to another VC Wisdom podcast. We have Victor Orlovski with us today. Victor is a managing partner at R136 Ventures in Cali, Menlo Park, I do believe, and co-founder at NEIC, New Economy Investor Club. Was CTO in the past, was also a partner at IBM and occupied a bunch of positions, has 400 million in AUM, Wall Street Journal best-selling author. So Victor, I'm glad to have you on. Can you tell us a bit more about yourself and what you're up to nowadays?
Hi, Charles. Hi, everyone. Great to see you, and thanks for having me. So very briefly, I was born and raised in Uzbekistan, former state of Soviet Union. Was excited with technology. I had my first PC. I think I was the first in Uzbekistan who had a PC, and started my career as a software engineer. Ended up becoming a CTO in two largest banks in the region, and then started my own venture firm back in 2015. So since then, I keep investing in technology companies, primarily B2B enterprise SaaS and Fintech, where I have like tons of experience and really love what I'm doing.
And why transition to the VC world? Is that a better thesis for you than just founding the next billion-dollar startup?
You know what? When I just left my corporate world back in 2015, and I was overseeing a technology unit over 25,000 people. That was a giant company with giant tech underneath. So I thought of what I'd do next, and I definitely wanted to do business. I wanted to become a businessman. Probably I didn't fall in love with one problem, which would take all my energy. And I decided rather to date with different projects. And I'm still in search of something what I might start doing as a founder. I admire what founders are doing, but I think that venture capital is very much essential to develop these brilliant ideas of entrepreneurs. So I'm really happy to do what I do now. And I think that's where innovation is born. So from venture perspective, I think we are not investors, we are builders. Although we are not building ourselves, but we put tons of energy and focus on building stuff. So we are not alpha seekers, we are alpha builders for that reason.
And you have 400 mil in AUM. What were the returns on that so far?
Well, we have really pretty exciting fund one. We could not give publicly data. I mean, it's like all a heavily regulated business, but I think that we are doing pretty well in fund one. And this fund has been like a vintage of 2014. So it's almost over. We have a bunch of exciting companies there. One of our best bets was eToro, in which we invested back in 2015. We were one of very early investors, and we are a very significant investor in eToro. And eToro went public this year, and it's a family already, more than just a business. It's like family ties with the company. And I think that this fund will be doing pretty well.
What's your investment thesis, generally speaking? What kind of companies do you invest in, and what type of founders?
Well, founders, I believe that's the most difficult question to answer, because it's more just to find out the right kind of person, enough resilient enough, passionate enough to sustain for like a decade of hard work and dedication. And it's really difficult to give like a checklist what the founder should be. I believe I have like tons of experience working with people and judging whether this particular person can make it, right? So on the business front, we are really excited about Fintech. We think that Fintech is far from being over. Some funds think that Fintech is dead. We do not think so. We believe that Fintech is something what is yet to show like huge upside. And there are tons of problems which are not yet solved. Obviously, we try to invest into big enough markets So this market should also grow at a pace of at least 25-30% year to year. And well, we try to build like category leaders rather than just to invest into copycats. So eToro is a clear example of this. I think we can name other companies like Rescale, for example, which is high performance compute in cloud. Theta, which is a category builder in AI compliance tech for financial institutions, and a bunch of others where we really bet on just category builders rather than category leaders. So that's our thesis.
And can we double click on fintech is dead? I've never heard that, and that doesn't make any sense to me. Like, who has said that, and why is this picking up movement? I'm just not getting that one.
Well, you know that valuations after 2022 heights, valuations shrinked a lot. So valuations are far from where they were in 2020, 2021. So those investors who made their bets in these 2 years when fintechs were traded on the private markets at 100x and more multiple to revenue, and now they're traded at say 10x multiple. Obviously, these investors could not recover and will not do well with the investments. So I probably these investors actually are not bullish on fintech anymore. Again, I do understand fintech from within, so I do see how many things can still be improved and how many new things can be built. I'm very bullish on, for example, crypto technology being really applied in a huge way in fintech, which is not yet there, right? So we will see a huge evolution in that regard. Obviously, AI will change fintech quite dramatically too. So I believe that these two waves, blockchain or Web 3.0 technologies, and well, all this like DeFi's and stuff on blockchain and AI will transform fintech like nothing and never before.
What common mistakes do you see in VCs and investors when it comes to investing in startups?
I think that the biggest mistake is fear of missing out. This is what really drives the whole industry. When you see like everyone is investing like crazy in something, you probably would stop investing. However, FOMO probably is the biggest driver in venture world. In I think overall in investments, right? Everyone tries to be rich, and when like everyone starts investing in something, I think that's the time when you have to put things on pause and wait until things will cool down, and then you may make like wise decisions what to invest into. Yeah.
And what about founders? What mistakes are you seeing when they actually raise capital?
Well, I think that there are two mistakes. You may not raise at times when you can, right? I saw so many companies, really good companies, that were not raising during the high season before June 2022. And I would divide companies after June 2022 into two groups: those who managed to raise and those who didn't manage to raise. Obviously, those who managed to raise were in much better conditions, because for the next 3 years, there was almost impossible to raise any dollars. And those who raised had enough cash to actually sustain through these 3 years. So they come out of this crisis way stronger than those who had no cash. Mainly those who had no cash disappeared from the market. Second, obviously, you should not hunt for highest valuation possible. I think the worst thing what may happen is that you have a down round after you have an up round. What we saw in 2020, 2022, a bunch of companies, especially in high season and in this very hyped fintech markets, they raised 5-6 rounds a year, which never happened before, right? And they actually went from say $1 billion valuation to $10 billion valuation, or from like hundreds million to billions of dollars in just 1 year, in subsequent 3, 4, 5, 6 rounds in a year. And those companies also didn't do well throughout next 3 years of a dry season, right? And the reason for that is that it's really difficult to sustain this pace of growing valuation. So you have to choose not to choose the best valuation. You have to choose the right partners. So many founders do not really understand the value which is created by a good, balanced, and efficiently working board of directors. So if you hunt only for valuation without taking care of who is going to represent those VCs on your board, probably you are going to suffer a lot in the future.
Interesting. What of your investments have been successful and you can say I have a formula for this and I can reproduce it? Or is there a great deal of luck in the VC world?
When I just went to just came to the Valley and spoke to actually those gray hair investors who made it through their lifetime, 20, 30 years of investments. When I asked them what was the reason for this success or that success, and when you keep asking, they give a lot of reasons. I mean, it was a great team, and then okay, this was a great product and a great moment, and blah blah blah. But then, I mean, the last resort, last thing they would always say, "Oh, this was a tailwind." So what the tailwind stands for? It stands for luck, right? At the end of the day, you have to be lucky, and indeed, things have to come the right way, the right time. So I believe that Google and Meta and Amazon, these were strongest founders and strongest business models you may imagine. But at the end of the day, they were also lucky. If even they don't acknowledge it, there was something what you could not attribute to people, technology, or product. It was just the right time. They started with the right thing. And I think that this is true about every startup, right? I had so many cases when my worst performing startups were pivoting to the best performing in a few years. So say 2017, when we just assessed our portfolio, we had few outsiders, which we thought will just end soon with no more funding, and we will either lose them or sell them and will not recover. One of those startups, which we thought will be a failure, has turned around to be one of our best startups in the portfolio, and that is, I think, common in this business. However, I believe that everything in this business is people. Obviously, in seed early stage, this is all about people, and this is not even about product, right? So there are a bunch of founders whom I investing in as angel. And when they just decide doing something, I don't even bother myself to ask what they are starting. It is just a matter of trust that these people will discover what is right and what is wrong, and they will do definitely something really great. So, in my opinion, people matters, but not only in first stage, in early stage, but in mid stage and late stage too. So, I think that many investors underappreciate importance of team, of leadership in the late stage startups. They tend to look into financial models, into results, products, but they do not really assess people in the way they should. And I believe that this is business of people, no matter which stage you are investing in.
Interesting. These founders that no matter what they get into that you would support, is it because of their specific track records? What specific skills or mindsets have you identified in them, or do you just look at the results?
Well, I think that they have to be positively obsessed with the problem they are trying to crack, they're trying to solve. I don't like founders who are in love with their solution. When they speak more about what they built, I do not admire that much. I prefer founders who speak about the problem. So I try really to measure how much of their time how much of their passion is about the problem they are solving rather than the solution they're having in their hands. Because every solution is a temporary thing. If you fell in love with the solution, you will never end up solving a problem. So I believe that that's the first thing. Second is resilience. I think that the most important thing for founder is being resilient, because 10 years journey or 12 years journey to build a great company, you have to be resilient enough, and you have to face the issue. You have to face the troubles, right? You have to believe in yourself, like Edison or like Ford. You have to really see no obstacles. When you're solving a problem, it does not mean that you're afraid of obstacles, right? Obstacles are these challenges to overcome to solve the problem. And that's what I'm trying to assess. And again, as I said, there is no any like checklist you can apply. This is all about experience. And if I'm wrong, mostly about is that I do not assess founders really well, right? I mean, those failures which I had in my portfolio companies are mostly related to my mistakes when I thought that the particular founder, the particular team will be able to manage it like a more difficult situation that you may imagine, and they were unable to do it.
And how has the VC landscape changed since AI? Do you feel that founders need less capital? Do you feel that they need more capital to buy their own GPUs, for example? What's your thesis on that?
Well, certainly AI has changed the landscape of VC pretty much. So everybody is investing in AI. And obviously founders who build something different than AI, they are switching towards like AI. Everything is being packed with AI. And basically investors nowadays do not want to buy anything what does not have like AI inside, right? Which is kind of a weird thing. I believe that indeed AI is a huge thing and it's like next industrial revolution. I totally buy it, but I do believe that AI will soon, in a way, become an like commodity and an infrastructure, right? It will be like electricity or LTE, like mobile. So everybody will be having it. So AI itself could not be a competitive advantage. The competitive advantage here is data, especially proprietary data. The competitive advantage is knowledge of industry, deep knowledge of businesses. And I admire those teams who apply AI, but who also know the industries, know the problems really well, right? So AI tool itself is not enough. What you need to have is vast and deep knowledge of the problem of the industry you're working in. So obviously funding for AI is like definitely like you need a lot more dollars to build certain things in AI, right? Especially if you're building, say, this first layer groundbreaking technologies, LLMs or infrastructure. However, if you build like vertical, as we call it, vertical AI products, which like apply to certain problems, it's a lot cheaper and easier to start those companies now, right? Because you can actually build a product in just days, or I even saw like building products in hours. So a smart team, and it's not a smart team of engineers, it's a smart team of basically product people who can now create the product without engineering effort at all, which is like amazing. So I saw like really great products being built in just few hours. If you have the right idea and the right like tackling the problem right, you can really build it in hours. And like 3 years, 4 years ago, you would need like at least 3-4 months to build the same kind of product. So for some startups, it's becoming much cheaper. For some startups, it's becoming much more expensive.
I've also heard a lot of founders ask the question, like, will OpenAI put us out of business, right? And I think it's a wrong question, right? It's a naive question because when you actually built a client base, the loyal client base, and you actually are in touch with your clients and their needs, like OpenAI replacing you is like pretty unlikely. What do you think about that question?
Well, there is always fear that one company will take it all, right? And we have constant discussions whether ChatGPT will be a kind of a universal tool for solving every problem. So I don't believe that it's coming. I do believe that there will be multiple different solutions for multiple different problems. And especially in B2B space, there will be no winner take it all, because you need to actually, as a customers, like customers do not want like one solution for all problems. Moreover, they do not want to rely on one company. They want to have more players and more different options to buy. So I believe in B2B space, there will be evolution of different products on top of ChatGPT. Again, I'm thinking of ChatGPT capabilities to be kind of electricity, if you will. So if you think of like Oracle database, that's what ChatGPT may become, right? So Oracle is probably 60–70% of the corporate system of records market, right? Yet Oracle is not building like every possible product, right? So there are tons of different technologies which are built upon Oracle or other databases. There will be same thing in ChatGPT. So I don't think that it will be like one and only solution, right? But even on consumer side, I believe that there will be more competitive products. And it's like in biology, like species diversify and occupy like different niches. There is no one species, like one kind of species that took it all, right? I mean, entering into every niche. I believe that this will be the same with artificial intelligence.
Thanks so much for being on, Victor. Where can people find out more about you?
You can go to my LinkedIn page. You can go to our website. It's www.r136.vc. But you can also buy a book which is available on Amazon, which is called From Rhino to Unicorn. And that is the book which is still very like actual, and I think it's tackling the right problems and providing some solutions to large corporates that wants to innovate and want to build new products like they're like unicorns, right? And it's extremely difficult to build products, to build innovations in large organizations. So I think I'm like one of like few experts who made it, and I share my knowledge and experience and giving a bunch of solutions on how to build innovations. So you can just read it in that book. And obviously a podcast series, Ventures from the Valley, which we run, where I interview a bunch of startuppers and VC managers.
There you go. So that was Victor Orlovski and Charles